Hey, welcome. What is this evening's ACY Securities webinar? My name is Duncan Cooper. So tonight's webinar is a review of the recent Forex trading patterns. And we're going to just be looking at the market from the previous month, what patterns were setting up. Could you have seen them? Can that help you in the current month coming to improve your overall profitability? So that's really what we're doing tonight. Before I get into that, just to let you know, tomorrow I have a webinar, live market analysis, live Forex market review. That will be 8 p.m. Sydney time tomorrow, Thursday. So before we get into tonight's webinar, if we could all just read through the disclaimer. Or I will move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor at ACY Securities. And I've been trading the Forex market now for more than 15, almost 20 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. And through the week, you can connect with us at the website, acy.com, go to the market news tab, our YouTube channel, ACY Securities Australia, or if you want to connect with me personally, head over to my Linktree page, handles there, and you can connect with me on social media. My links will be found there. If you want to get access to the charts that I'm using in MT4, so my chart layouts and templates, just contact Nathan. His email's there, nathan.bray@acy.com. I'll put his details in the chat now so you can contact him if you've got any questions about setting up those charts. All right, so let's get into the, tonight's webinar is about reviewing what happened last month. Can we learn from that? Of course, through each month, I take you through some education webinars. Some of those are on patterns in the advanced section of it when we go through that area. But, can we see what's happening or what did happen last month, and can we maybe see the same thing happening this month? Doesn't, it might be patterns that I talk about tonight, or just maybe how price is setting up. It maybe reoccurs quite frequently. Will you be able to see it this month when you saw the same thing happening last month? All right, so let's get into the charts. Now I'm going to go through US dollar pairs first. If I've got any time after that, we'll hit some of the yen pairs, but the pairs to the dollar primarily were offering some nice patterns, some nice price action last month. So let's review those first and we'll see how we go for time. If you've got any questions, just type in. So first of all, we'll start with the Aussie. So this dashed line just represents the start of the month. So price action to the right here is the previous month just gone. All right, so just checking my notes. And I want to focus just at the start of the month here. I just want to draw in with my drawing tool here. The price came up to a higher top in the previous month, and as we're getting into the new month, we were pulling back here. All right. And, we might, thought, well, maybe we could pull back to this area for a head and shoulder pattern. So maybe there's going to be a left shoulder head. Could we come down here for a right shoulder? Or maybe we're going to pull back just for a 79% retracement pattern, maybe something like that within the trend that's maybe starting to form for the upside. So just grabbing a fib in here just so we can see where price pulls back to. We almost get to the 79% level. But what I see here, and I do a webinar on this in the advanced series about liquidity, is we get a false break of this area here. And it's more apparent on the 4-hour chart. So this is this area here. Let's just get rid of that line. We know where the new month is. It's here. There's a number of 4-hour lows here. And we come down. We almost get down to the 79% level. So if you were looking to trade right at 79% level, you would have missed. But then we kind of reject, come back up, and we start to false break this area of support here. All right, so this is just really pushing down, taking out any sell stops that are underneath these lows. Once those stops have finished going off, nobody else is really selling. We've got this area of support over here to the left as well. We've got these 3 lows here. And so we come down and really false break this area, almost hit the 7-hour retracement from the day chart. And then we start to come up. Now, just from a 4-hour chart perspective, you could have simply been looking, if you saw the rejection here, you could have said, well, once we maybe trade above this low, so we're coming back above all these lows, I want to get in with a stop below the low here. And then you could have been using the fib tool, you know, there's a 79% level, 127 extensions up here. And then we obviously do move up, and it just does meet the 127 extension. So it was almost a 79% pattern, but if you didn't get a fill down there, then you could have been looking for a false break of all these tops here, sorry, all these bottoms here, and then looking for a reversal back up. Now, we can go down into that area and have a look on a 15-minute chart, see what kind of entry we may have been able to get down in that area. There's definite entry on the 15-minute chart. It was the 3rd, I think it was. Break my mouse to get back there. All right, so this is the day where we come down into that, just short of the 79% level. We're also in the green section of the pivot points, which I've been teaching this month, or sorry, last month. And in the green area of the pivot points, that's where you're going to expect price to bottom out and move back up from. So we do get a couple of ways of getting in here on the 15-minute chart. Then we get a swing point break here. So you could be buying on the break, stop below the previous swing point. Price moves up. Could have been looking at some form of a trend line break, which would have been in for a little bit before the swing point break. So you could have gotten in quite close just based on the 15-minute chart if you understood the area that we were trading into at the time. And maybe expecting that we, you know, just fell just short of the 79% level, and then you got a couple of ways of getting in there on the 15-minute chart, and then of course it has a nice reversal back up the chart long term. All right, so really stemming from everything I'm going to be saying today is stemming from the higher time frame charts, and that's just not dropping on a 15-minute chart and going, hey, where's my setup? All right, so really it is a 79% retracement. We just got 1 or 2 pips short. All right, that's really the pattern. And then for me, then there's this area over here of resistance that the market comes to. Previous level that was respected for quite a while in previous months. Back in January here, we had this consolidation area here. So primarily what I'm seeing here is lots of shadows here, coming up, going back down. And I was focusing on this high here. You could have been using that high, but I was using this one, 66.21. So we trade above there, but you can see by the candle on the daily chart that we false break. Significant rejection. And I've said this, I think, through the course of the month, but none of these candles here are closing above the area. All right. And so just from a day chart perspective, if you just want to trade from the day chart, just break in the rejection candle. Showing you that we're rejecting this area here, and of course these 2 lows here as well, is if you simply sold on the break, stop above here, looking to target from where we came from, well, you can see we've actually come back down to where we started the move up. Now, of course, there's been a few swings in between there, so maybe you would have managed the trade. Because if you didn't, well, we would have come back up and tested the entry for sure. But ultimately, if you just didn't do anything, you would be in profit by at this stage. All right, so let's have a look at this area here. And, you know, this spike up here, because there was actually the opportunity more than once in the course of the month to trade down from this significant resistance area to the left there that got formed in previous months in January. All right, so let's have a look at this area on the 4-hour chart. So I primarily would, in a perfect world, if you just go back to the daily chart, I would look for a 79% retracement of this candle range. Wants to see that candle, but that doesn't happen. But at the start, I would have been looking for that. So at the start, I would have been maybe having a fib drawn like so at some point, depending on where the low of the day was. Let me just find out where the low of the day was. So what I would primarily do, I would put a fib across high to low of the day. So that would have been actually like so. And as we come down here, then I would need to adjust because we never come up. So what I would have been doing is dragging a fib down here to that swing point. Now, if you're looking to trade 79% level, well, we never get up there, so that doesn't work. Then we get this kind of big outside candle, which forms another range. So then the next range is here. So this time we do have the opportunity to trade at the 79% level. So there's a 79% failure pattern here at the retest of the 62.21 level. So, you know, we've had the failure. This never comes up to the 79% level. That's a 62% retracement of this range from high to low. And then we move down. Then we come back up. So trading at the 79% level here, stop above the high. Now, of course, it goes through. But you can start to see all these candles on the 4-hour chart, not one of the candles is closing above the 79% level. So even if you're sitting around waiting and thinking, is it starting to hold there or not? Just selling at the 79% level, stop above the high. It never stops you out. Excuse me. All right. So there was the entry, 66.24. Now you could have just been looking to take profits down at the 127 extension. That would have given you a nice profit. Or you could have been maybe holding. See how we create an imbalance down here. As we started this move up here, we created an imbalance here. And there's a few more imbalances. There's more of an imbalance in here too, and a bit more up here. But the first part of the imbalance is here. And lo and behold, if you're aware that there's an imbalance in there, and there's a few more in this leg up here, the price actually may be coming down to fill the imbalance. So that would be a great area to target long term from a fair up here, if I get my drawing tool to work. And lo and behold, where does price come down to? It actually comes down to the start of the imbalance. So it is important if you can start to see where these imbalances start at the bottom of a range to move up. Once we fail at the top, we'll often then, over the time, through the month, come back down and fill the imbalance. So there's a prime example. Now as well, I was looking to trade down from here. I wasn't looking to trade up, but if you were more bullish, as price was getting back down to the bottom where this imbalance is here, then there's actually then another 79% point. So let's go back to the day chart a moment. We know the day chart structure here is up at this point. It's got a bit messy in here, but you know, if we're using the major swings, bottom to a higher top, or we're going to put another higher bottom in here. So just taking that philosophy, we come down to the 79% level, just here. Then there's actually a smaller 79% level. So if I just draw in a couple of swings here, we come down. Now you could have been very bullish here, thinking we're going to put in a higher bottom on the day chart and just be trading at the 79% level. Or you might want to wait and see if we get a bounce in the area, so we bounce up. And then if we draw a fib in here, there's a 79% pullback here. So you could have been looking for a smaller pattern, entering around about 69.12. Stop goes below here. And then you know your obvious target would be where? From where we've came from. If we're looking at as a kind of range, then I would expect maybe we're going to go back up. There's an imbalance in here. There's an imbalance in here as we were coming down. So like we came down to feel this imbalance over here, we then move back up to feel this imbalance. I think there's some news through this period as well. So it drives it all the way back up to my resistance level. Okay. And then your question is going to be, are we going to carry on through, or are we going to hold here? I was expecting maybe we would hold here. So I actually got short in this area here. Just tidy this up a bit. All right, so we have a 79% patterns down there at the bottom, whichever one you want to take, the big one or the small one. If you took the big one, it doesn't meet the 127 extension up here because it gets stopped at the top of the range that's been forming here. All right, but of course there was profit to be had moving up there. All right, again, just from rejection candles, if you were just trading from the day chart, this failure here at resistance, you could have just traded the break of the rejection candle, stop above the high. It's quite a large candle, but you can see that that simple approach has worked into some profit at the moment. Now, whilst there's that 79% level area here where price came up to, when we fail at the resistance area, we draw a fib the opposite way, then there's a 79% level here. So there's always two sides of the market where the market's battling between the buyers and the sellers. Yes, we come down to this point, which is a 79% level, and find support. And then we fail up here at the 79% level. This one I like much better than this one down here because of the resistance to the left. Right, so you have the option to trade at the 79% level. If you have a 79% level, so this is what I call a 79% level that's at resistance. It's not naked. So if I say it's naked, there's nothing, you know, if you draw a fib in and you got a 79% level there, but then to the left, there's no support or resistance from previous price action. I call that a naked 79% level because there's nothing there. Whereas here, you've already, when we were in this area previously this month, we failed. Here, here, all these 4-hour rejections here. So we already know at this price point that's been previously defended by the sellers. So if we have a 79% level in the same area, there does become a higher probability area where price could hold and fail. Now, we come down, just based on the 4-hour chart, we have an outside candle. So you could just trade the break of the 4-hour candle to the left, stop above the high. Of course, we move down, and you could be maybe still short now, really, depending on your thought process. If you're trying to target the 127 extension, then we haven't quite met the 127 extension yet. It's down here at 64.59. It's been breaking through this point, and it hasn't been able to break last month's low quite yet. All right. Now we can look at this area on a small time frame. could you have been executing up here on a small time frame? All I actually did was once I started to see this reject from the 66.32 level, I think there was some news coming out here, so I was just a little bit not wanting just to click in. I wanted to see some form of a failure. Is I actually got in once we got back below 66.21. I got in about 66.07. So let's just go back in time to that area. In fact, I should put a line in because I can't. Here we go. If I can find the day, it would be great. What's the day? So it's the 21st. All right, so here comes the 21st. Now, there's a couple of ways you could be getting in. Sure, you could look for some form of trend line break. And using the big swing points there. There's a trend line break. And of course, we move down. Better approach in my mind would be trading a swing point break here, because that trend line break is you're still trading into 66.21, which we're above. That could be support as you're watching price action. But once we break this swing point here, so a close here, that would be a better place to sell. Stop above the high. I think I got in somewhere. Wait, this came up and started to turn over, so I got in here somewhere. I had my stop above here. All right, so you could have been on the 50-minute chart getting in, or a 4-hour chart. I am still short at the moment. All right, so those are the things I wanted to talk about on the Aussie. And I might need to speed up a bit on some of the other pairs to look at. So there I've given you a good deep dive down into some lower time frames there of how you could have gotten in, but it's all a lot of it based around watching the 79% retracement areas of the pair, either side of the trend there. Rather range bound that pair, but just showing you, the war opportunities to trade there. All right, let's get into now the euro dollar day chart. All right, there's the start of the month just here. And I've just got a fib drawn here. I'll just go through the higher time frames. All right, so the monthly trend is a little bit mixed in terms of the big swings, because you could say this is a higher bottom and you could say this is a lower top. And I've been more thinking that there's some minor lows here that have been broken to the downside here and here. So I've been much more that this has turned to down here. This has been a corrective rally and we're going to go like this long term. That's my thought process. But my thought process ever since I've been thinking that we're kind of forming a little head and shoulder pattern up there. So my bias has been to the downside through this year. Weekly chart, we moved down to a lower bottom here. So yes, we came back up through here. Let's get rid of that line. We come back up here, but I was looking for some form of a lower top to form because this was a lower bottom. So it's looking like through the course of last month, we formed that lower top on the weekly chart. And of this weekly swing here, we came up at the start of the month to the 62% point. And of the bigger range, there was actually another there's a 62% from the bigger range, 62% from the smaller range, although these are large ranges. So we have an overlapping fib scenario there of the larger range and then the smaller range. And let's just talk about the large range first. you know, once you've got the fib drawn across a large range, we can quite clearly see that it fails at 79. See how this area here, price action, once it moved below the 62, it all became resistance in some form, okay? And then we obviously come down. And then when we revisit that 62 level there, it quite clearly wants to be resistance once more. And of course, as I've just shown you, we have then this range, the more immediate range, there's a 62% level of that range as well in the same area. So we have two 62 levels. All right, just to show you how you can be using two ranges together. One's inside the other one, obviously. All right, so primarily my focus was once I started to see this hold at the 62 level, then I was thinking, okay, well, are we going to be now shifting back to the downside? All right, so if you do have a primary area where you think the market's going to fail, we get a nice rejection on the day chart here. If we move to the 4-hour chart. All right, we come down. So whether it's a fib level or it's just a price resistance level, a lot of the time we're going to sell off and then come up to retest. All right, sometimes we don't hit the area that we're failing at. So we come down to this point. And lo and behold, price comes up to the 79% level. All right. Now, you may not yet have started to realize that maybe we're topping out up here from on the day chart just yet. But the 4-hour chart, if you weren't prepared to go, okay, I think we're failing at the 62% level. So draw the fib up for the rally. Yes, you could have an order there sitting there to sell at 79 because that's where the price comes straight up to. Or, so that's one entry, stop above here. Or then the 4-hour chart rejects. Lovely little rejection candle on the 4-hour chart. You could sell the break of that. Stop could go above here. Or you could put it above here, targeting the 127 extension. Or you could have been targeting maybe a long-term move down the range. Because if we're failing at the 62% level of the higher time frame, we could be then moving down to the 127 extension of that higher time frame. So you could be getting in here for a long-term positional play. But if you just wanted a 1 or 2 day trade, this trades down to the 127 extension here. There it is. Goes a bit deeper down. Now, I say this all the time in my analysis webinars. My dog wants to be quiet. Is that once we get down into the 162 area, this is not where you want to get short. So this is just a prime example of, we come up to, get my drawing tool back in, we come up to the 79. Once we get to the 127, that's a great area to take profit. Yes, we can move deeper down. But once we get to the 162 level, there's a high chance we're going to move back up the other way. All right, so then you should be getting set down here for this to come up and put in the lower top. So when I say a lower top, that'll be a lower top on the day chart. So that's the first 79% retracement. Then we come down. Then we actually come up for another 79% retracement here before then moving down once more. So let's just show you that. All right, there's the next 79% level. And what price is really doing, this was actually, I think, the FOMC statement in the US, and maybe lots of people think, we're going to be going up, up, and up. But it really is it's just some news that's coming out that's positive, well, negative for the US dollar in terms of how it reacted, but it's just corrective against the trend that's been forming, which is down. comes up to the 79% level. You have 3 candles there trading at the 79% level where you could have traded at if you really wanted to. Could have put your stop above here. Then, of course, this has a nice sell down just short of the 127 here. That's why I say that's a good area to, yes, take your profit. All right. Then it bounces back up. So it's pretty much a 79% retracement up here. Comes down to 127 extension before having a bounce. This move up here, if you can start to understand, because I think a lot of traders think when price is collapsing down here, it's just going to go on down forever, But yes, it can if things get really severe for a few more days. But usually it'll go down, rally, down, bounce, down. And often these rallies coming up are to fill any imbalances that have been formed. There's an imbalance here, okay? So this movement up here is coming up to fill this imbalance. And then when we fail here, this movement down here is wanting to fill the imbalance that got formed through the FOMC statement. Okay, price comes down to fill that imbalance. Now, there's actually an imbalance here that hasn't been filled yet, but sometimes an imbalance doesn't get filled because the reverse price action down is filling the massive imbalance to the left. But we do create an imbalance here, and then price comes back up to fill it here. All right, so let's have a look at what was going on here. Just get my drawing tool to delete. All right. So here we get a rejection. You can trade this off the day chart, or you could have been looking in this area, because as we moved down, we broke below this area of support here. We moved below it, and that support became resistance there. So just from a day chart perspective, you could trade the rejection candle, stop above the high, maybe not as high as that, but just above, and that would move you into profit down the chart. And I was saying that first 79% retracement here, you could be holding that right now with the theory that, okay, we're failing at the 62% level on the big chart, targeting the 127 extension down here. So you're mapping this out. All right. And so that's your long-term goal at the moment if you're looking to take a position. And of course, in this move down at the moment, there's all these rallies. We had a 79% retracement 1, second 79% retracement 2, broken support becomes resistance on the next rally, which is just here. We can have a look at that on the 4-hour chart. Was a nice 4-hour chart rejection here, and you could have simply trade the 4-hour candle here. What was noticeable is this imbalance on this candle here. This was coming up to fill that imbalance there, and then it rejected. So selling there, stop above the area, could have given you a tighter entry if you wanted to. Okay. All right, so trading quite nicely the euro dollar through the month on that failure at the top and the 79% retracements. And I got a couple of questions coming in. Tal, well, my support and resistance, this is called the support and resistance indicator that shows these highs and lows. If you just contact Nate, then I'll put his details in the chat. He'll be able to give it to you. Just get my chart layouts and templates. Raina, you asked me, do most large investors trade the 68 level, not the 79? I don't know what the 68 level is. Is it the 62% level or 79% level? I don't know what I've never heard of a 68 level. So I don't know where you're getting that 68 level from, or 62. So, well, price can stop at the 62 or the 79. But hopefully, the way I'm showing you the swings here, you can see that on this euro dollar, and on the Aussie dollar, the 79% level is often being traded to, isn't it? So it can stop at the 62 or the 79 or in between both. So, but I like to trade the 79% level because it offers you, you know, if we're selling on the chart, we're selling at a higher level, or if we're buying on a chart, we're buying at a lower level, and then it gives you more opportunity to make profit as it moves up or down towards the previous high of the 127 extension. Okay. Harry, you're asking me, does Fib regularly apply to indices? Like, yeah, the Fib will work on the indices as well. All right, I'm going to move on to another pair. I had quite a number of pairs to go through, but there's lots to just on two pairs there, just for the month, there's lots to talk about. So I'm just going to keep going until maybe like 7:50, and wherever we get to, we'll get to. Next pair I want to talk to you about is now the pound. So let's move to the pound. This was the start of the month, and at that time on the day chart, we were in uptrend. And I think this is where things get tricky when you're not doing multiple time frame analysis, is that as we're moving into an uptrend, well, we're in an uptrend for sure at the start of the month. We're here and we come up, right? And everybody will say, well, this is a higher bottom, a higher top. Surely we're going to pull back and have another go like this. And sure, the market could do that. But the thing that you have to realize is if the market's going to do that, it has to respect the areas of resistance that it's broken to the upside. So, it's broke. This was a monthly high over here. Well, don't you see that we come below and then come up to retest that area, and it doesn't want to go above. As soon as that failed there, that was your signal on the pound last month that this was probably then going to go down. Then we come down, we rally, we come down, we had a bit of a bounce back up to this area of support, and of course we've been moving down as well. All right, so whilst we had an uptrend coming above this high here, once we have a false break above a significant level of resistance, we're going to continue up. We don't move back below that level, because this is really a sweep of there's all buy stops above here where sellers have their stops. Some retail traders are saying, well, if this moves above here, I'm going to buy. So this is where the institutional traders are taking the opposite side of those orders, which is a sell, gobbling them all up. So this is really a liquidity trap to move back down the other way. Now, as well, from the higher time frame, so if we go to the weekly chart, well, the monthly chart here, there's some form of a range just here, high to low. That's that monthly top area that we false broke, but had a fib drawn across that range. You'll see that we just come up short of the 79% point. All right. And then we couldn't hold above that high just there. So then, that was kind of a signal that maybe we are going to be trading down for the month. And if there's anything that you might glean from last month's trading, is we have a significant rejection candle on the monthly chart at monthly resistance. So as we look into a new month, that just in my mind would say, okay, we're going to have a month down this month from what we saw last month in a perfect world. However, we could still trade back up inside that candle for some of the month before then moving down. All right, so that's how I would look at what happened last month into the new month. Now, let's just go back to the day chart. Well, let's have a look at this false break at this top. Now, sometimes, I give you patterns to trade, and those patterns, come up perfectly on the chart, and you can trade them. Sometimes in an area, you can be looking for a pattern to trade, and then, it doesn't give you the pattern, and you can't get in. All right. So if you're very kind of, if all you're doing is looking for a specific pattern, and then you look for that pattern to set up, and then it doesn't happen, you don't get in, you go, okay, I just have to wait for the next pattern when it sets up. But you can be looking for a pattern, and okay, you don't get in. But what can you learn from the area where the pattern didn't form? And if you see that again, can you start to realize what's going on? And then, okay, your pattern that you're looking for doesn't form, but then was there a way that you could get in irrespective of the pattern not forming? And next time, could you, apply that? So here's the top. It's at 128.27, which we false break. So if you've had my lesson on the figure, it's 128.27. So, it's close to the 12800 level. Now, for me, in a perfect world, if I think we're struggling here, I would look then, I'm just going to drop down the 4-hour chart. As we come up and then we fall down, I would then look for a 79% retracement to come up, come down, to come up, try to get back above this high if it can, and do something like that. All right, so I can work out where the 79% level is. I can put my entry here, my stop above here. But then, of course, price doesn't get up to there. Doesn't even get up to the 62% level, because all it's really doing is it's respecting that high. And sometimes all that happens once we false break a high is we just come up to retest the high and nothing else. Sometimes we don't even get up to respect the high, because you can see here that we don't respect the high. That's the resistance level. So come down to here. Now, once we move below, so this is understanding what price does, or whatever price is doing is whatever price is doing. And you might want it to come up to a 79% retracement, for example, but it'll do whatever it wants to do. And sometimes it'll fall in line with the pattern that you're wanting to trade, and other times it won't. But noticeably here it comes down. This rally here, so once we fall below, it comes up and it can't get back to it. So all that is telling you is that the sellers are very keen to sell here, and they don't want to allow price to come back up to the level. So they're keen to get in. They don't want to wait for it to come up. They're prepared to take control and then move it down. All right. Then we come up and we put in an equal area. And you can see that the 4-hour candle here looks negative. Now, you could have tried and traded maybe a break of these 4-hour candles here, because we have an outside candle, stop above here. That would have gotten you in. Or maybe this was, looking too complicated for you, and you just don't know what's going on here. How can I manufacture an entry? So sometimes maybe things are a little bit complicated. It's not presenting you with a pattern that you like. So, you're not getting in at the moment. But if you were patient through the course of the month, my favorite pattern, the 79% pattern, does come in here. As we move down, there's an imbalance here, okay? In this area here. We move down. So we move down, create an imbalance there. So if I've seen that we've got an imbalance here, just filling in with my blue lines, I'm going to think that at some point in the month, we're going to come up and fill it. So we come up, This is exactly the same what the euro dollar did to the 79% level. You could have been selling at the 79% level because that level there is where the imbalance gets filled. Stop above here. I would have put it just above the resistance area. And then we come down to the 127 extension. So that would be a great area to take your profit. Almost comes down to the 162 level. Again, you can see that once we're in the 162 level, if you're staying short, you know, I say this all the time, I'm never selling down here because it's going to come back up. All right, so there's a lovely 79% retracement there that you could have been looking to get in on. And then I just want to talk about price action, maybe just for the next 5 minutes or so on this pair, is there's your support low that we rallied up from. So the more that you can understand what price action is doing, you're going to see where you should be looking for, you know, a possibility to trade. Is we create an imbalance, you know, see how we come down and then we come down below this area, becomes resistance here, trade down. And then all that happens here is we come back up to the previous level of support, which becomes resistance. There's a 4-hour rejection candle there, and you can just trade the break of that candle, you know, for price to trade down. Now, it gets a bit messy in here, but I can see a 79% retracement just in this area here. So we reject down, we come down to there. All right, then we bounce up to the 79% level. There's a little head and shoulder pattern in here of sorts. 79% level. Okay. Then we obviously turn around. There's a smaller 79% level in here. All right, in here, which forms a little kind of head and shoulder pattern of some form. All right. And then we obviously come down. There's actually even a smaller 79% retracement here before we come down this way. All right. So just in this area, which looks very messy, there was, you know, we dropped down, there's a 79% level, that's 1, 2, there's actually 3 in there as we break it down into little smaller swings. So if you get good at watching what price is doing, and so, okay, sometimes you might have to be watching this price action retrospectively to start to realize that, yes, there's a number of 79% levels in there that you could have just been trading as a pattern. But the reason why I'd be looking for 79% levels in all this area here to sell, rather than maybe look for a buy, is the dominant trend from the day chart is down. So my day chart trend is down, so I'm just going to look for opportunities to sell. All right. And I'm going to look for, I like the 79% pattern because it offers you the best risk to reward. So if I just tidy this up, just explain the risk to reward. You know, this one here, which is a perfect looking 79% pattern. So we obviously come up to there. But if we set the 79% level, stops just above there. If we just I'm pretty sure from memory, risk reward, if we just target support, risk to reward is at least 1 to 3. All right, because if we think that this 79% level here, we call it 80, then, you know, there's 20 from this level to the high. Now, if we call this range 100 pips, and rather than call it 79%, let's just call it 80, is there's 20 pips from here to the top. All right, let me see if I can draw that in. My drawing tool doesn't let me do freeform, I don't think. All right, so 20. There we go. So in actual fact, just to get down to the low here, if we're not thinking about the spread or anything, if I'm risking 20 pips up here, all right, and if that's, say, the 80 level, this is the 0 level here, there's 80 pips down here to this level if the range is 100. All right, so selling from there down to there, you've almost got a risk reward of 1 to 4 just to support. That's why I like to trade the 79% level. Getting it down to the 127 extension down here, the risk reward is going to be much greater than 1 to 4. All right, it does depend on the size of the range. The smaller range, then the risk reward gets a little bit skewed. But once you're dealing with large ranges, trading at the 79% level, just targeting support gives you great risk reward, and even better risk reward if you're getting down to 127 extension. So I'm primarily focusing on this kind of trend pattern, down, rally, down, looking for the fails at the 79% levels, be it in an uptrend or a downtrend, because it gives you great risk reward. Because I'm not right all the time. If we were just trading the 79% pattern and you were just had a hit rate of 50-50, you're either right or you're wrong. When you're right, let's say you can make the level of support down here. And let's just call that a risk reward of 1 to 3. All right, so we make 3. So let's say we're risking 2%. When you're right, you're going to make 6%. When you're wrong, you're going to lose 2%. So over 2 trades with a 50-50 hit rate or win-loss, you're going to be up 4%, theoretically. Now, of course, the hit rate never goes win-loss, 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 win-loss. There's always a random distribution. But if you're always, making a good profit when you're right, and it doesn't matter when you're wrong. You know what you're going to lose when you're wrong, and you need a good multiple of risk reward when you're right. All right, so that's that's why I focus on the 79% pattern, and I see the pattern can be setting up with head and shoulder patterns, can be setting up around just support and resistance, but primarily I'm trading it with the trends in a perfect world. All right. I actually had a lot more pairs to go through, but getting into some detail there takes time, and hopefully you'll be able to go to our YouTube channel tomorrow and you'll see the video on there, so you can just go back to it and review, and then go to your own charts and start to see, okay, how are those patterns setting up. All right, before I finish, I just want to go and see what the market's doing right now. Are there any 79% patterns, setting up? All right, there's actually one on the Aussie yen at the moment. On the 4-hour chart, I was talking about this range yesterday. We moved down to a lower bottom, and we're actually doing some kind of failure here at this 79% level. Now, I don't know if this is going to fail here and move down. Nobody does. But what I do know is that if I trade here at the 79% level, stop above this high, and price can come back down to where it came from at the start of the week, I'm going to make at least a risk reward of 1 to 3. And if it can move through, I can make a bit more. Of course, if I'm wrong, I'm going to lose 1. All right. But if I keep repeating that pattern over a series of like 20, 40, 60 trades, and I'm spotting the pattern correctly, and I only got a 50-50 hit rate, over time, I'm going to be on the right side of the ledger. And if I get good at finding that pattern, rinsing and repeating, then you can make that risk reward, work very nicely for you. All right, let's just pop through a few more. One here on the Aussie dollar, we haven't quite got to the 79% pattern today, missed it by 1-2 pips. Had that drawn in from yesterday. Euro yen's been moving up. For example, here, if you were trading the euro yen with the 79% pattern, that was maybe potentially, here. Well, on this example, you would be wrong. But I don't know which ones are going to work and which don't. I just have to decide which ones I want to trade and then see whether they're going to work or not. Euro dollar. All right. See, this is some of the levels I was saying yesterday. Price may come back up and fill this imbalance yesterday, which it has done. Now, it's seemingly at the moment struggling at the 62% level. So let me just get rid of these levels. And somebody's asking me before, does it hold at the 62 level more or the 79% level? I tend to find in the currency market, the 79% level gets tested more than the 62, but this range here for the euro dollar, it's kind of holding at the 62. Now I can see why maybe it is holding at 62 because price has just come up to fill this imbalance here that got formed. So it's just come back up to where we had the drop from the news on Monday. And that all lines up with the 62% level. So then logically, it could well then fail the 62 level, not get up to the 79% level. But for me as a trader, I would much prefer to miss out and wait for the 79 because it just gives me a better risk reward. Rene is saying, that's really cool, thanks. How often do you check your trades in a day and what time of the day in Queensland do you put them on? Well, I mean, like for example, if I like this 79% level, okay, what time do I put them on? I can put them on at any time of the day. Is once I start to see price action, maybe, it has a nice trade down. If I like this 79% level, all right, once price starts to head up, if I wake up in the morning and prices say here, well, first thing in the morning, I can just put my order there, can't I? As soon as I start to see this drop rally scenario forming, if I like the 79% area, well, I can put my order on in the first thing in the morning. And, I have my phone with me. So if I'm not in front of my charts, I can just check my phone and see where price is. So I don't have like a rule in stone how many times I'm checking the market in the day. Is I know certain levels that I'm watching. And, if price is getting close to an area, sometimes I'm trading down from a 79% level where I've just got an order sitting there, stop above the high. So I don't have to be there watching it when price is getting there, depending on how I want to enter. If I want to enter really tight on a 15-minute chart, then of course I'd have to keep watching price actions through the day. So I know when price gets to that level, and then I have to work out how I'm going to get in tight, maybe on an intraday chart, if that's what I want to do. So how much time I'm spending on the charts depends on what I want to do at an area. So let's say I've got a 79% level. It lines up with, say, resistance. Let's make a decision. Do I want to trade that area tight? Or do I want to give it some room with a wider stop? And of course, I try to get a good night's sleep, like I generally sleep 8 or 9 hours a day. So I don't, so depending on where the price is in relation to my level, I might have to put an order there to get me in because I'm going to be asleep. I'm not going to get up at 3 o'clock in the night to try and get a tight entry. So I generally get onto my charts. I don't normally get up till about 8 or 9 o'clock in the morning. I'm definitely looking at the charts by 10 o'clock to see what kind of patterns I might be liking. And then, I can put my orders in the morning if I want, or I might, depending on what I'm doing during the day, I might just be tuning on the charts through the day, just understanding where price is and where it's moving towards. And if it's, you know, I'm either got a pre-existing order sitting there, or I'm going to wait for price to hit the level, and then I will try to get in on tight entry, depending on, you know, what I'm doing. But a lot of these 79% levels that I've been showing you, especially on the euro dollar, say from last month, you could have had the order sitting there. You didn't have to be there all day long looking at the charts. Or if you've got your phone, you can just check it on your phone. Yeah, if you're going to enter on a limit order, you don't have to be there watching it when it hits, because it's either going to hit it or it's not. All right. All right, everybody, I'm going to wrap it up there. Tomorrow, if you want to join me, just head over to the webinar page. I can get these lines off. Want to join me tomorrow for my live analysis? Just head over to the webinar page to register interest. Other than that, hopefully you got some value from that review. And, you know, once you start to see something happening time and time again, be it, you know, in hindsight after the event, next time you see it happening in real time, hopefully you can take advantage of it. Okay. Well, I'm going to wrap it up as that. If you have the time, I look forward to seeing you tomorrow. Thanks, everybody.